Have you ever looked at a payment processing statement and wondered why some providers seem to charge a little more than others? Specifically, if you're a business using or considering Mamo, you might have asked, why are Mamo's transaction fees higher than some of the other players in the market? It's a fair question, and the answer isn't as simple as just they're more expensive. It's about value, transparency, and the underlying services that a payment provider offers. Think of it this way, when you're buying a car, you're not just paying for four wheels and an engine. You're paying for safety features, a sound system, the quality of the materials, and the reliability of the brand. Payment providers are no different. They all process payments, but they don't all do it the same way. The first and most important factor is transparency. Many providers out there might advertise a very low headline fee, but what they don't tell you up front are all the hidden charges. You might get hit with settlement fees, a fixed fee per transaction on top of the percentage, or foreign exchange fees that are much higher than the market rate. Mamo, on the other hand, is known for its clear, transparent pricing structure. What you see is what you get, which allows you to accurately forecast your costs without being surprised at the end of the month. This level of clarity is a service in itself and can save you a lot of time and financial headaches. Another key differentiator is the type of transaction. It's a common industry practice to charge different fees for card-present transactions, where a card is physically swiped or tapped, versus card-not-present transactions, which are things like online payments or payment links. Card-present transactions generally have lower fees because the risk of fraud is significantly lower. If you're comparing Mamo's fees, it's crucial to make sure you're comparing them to a provider's card-not-present pricing, as that's often where the real costs are. Then there's the issue of what's called MCC miscoding. Sometimes, a payment provider might offer a lower rate by intentionally or unintentionally misclassifying your business's industry. Different industries have different transaction fee rates, and by putting your business in a lower fee category, they can offer you a seemingly better deal. This might sound great, but it's a huge red flag. This practice is risky and can lead to significant fines from card networks like Visa or MasterCard, which could be passed on to you. Mamo operates with integrity, ensuring your business is correctly classified to maintain compliance and avoid future problems. Finally, you have to consider the whole package. Mamo isn't just about processing payments. It's an all-in-one financial services platform. It offers corporate cards, expense management solutions, and even multi-currency payments. When a provider offers you a low transaction fee, they might be making up for it by overcharging you on other services, such as corporate loans or credit cards. Mamo's value proposition is that it provides a holistic, integrated platform that simplifies your entire financial operation. The fee you pay isn't just for a single service, it's for the entire, secure, and compliant ecosystem that Mamo provides. So, while a quick glance at the numbers might suggest Mamo's fees are higher, a deeper look reveals that you are paying for a more transparent, secure, and comprehensive service. It's an investment in a robust financial platform that aims to save you money and time in the long run by eliminating hidden fees and providing a streamlined solution. With that said, thanks for watching, and until next time.